Good afternoon, everybody. My name is Ian Campbell. I'm Vice President of Operations at PACICC. This is our first Risk Officers Forum meeting of the year, so welcome. I would be remiss if I didn't wish you a happy April Fool's Day, one of my favorite days of the year. I'm the staff lead for the Risk Officers Forum, and I'm your moderator for this afternoon's broadcast. And I'm also the troubleshooter with our first ever Zoom broadcast. So we feel fully versed in this. It should go well, so bear with us as we move through this. These are uncertain times due to the COVID-19 outbreak. As I said, this is our first ever online Risk Officers Forum meeting, and we're pleased to have you join us. We have two very informative presentations to get to. And first, we're going to take a quick peek at the agenda. So I want to walk through some housekeeping items today. We do have our speakers, our keynote speaker is Penny Lee from OSFI, and we're going to have a presentation from Paul Kovacs from ICLR. And we're going to look at upcoming events and finally a satisfaction survey. And before I do that, I want to bring in our President and CEO, Alastair Campbell, and I'm going to put a spotlight on him. And Alastair, you're going to be on screen now for a few words of welcome to everybody. You can unmute.
Thank you, Ian.
Thank you.
I hope everyone can hear me. Like the rest of you, we are all learning new things at a rapid pace and working from whatever space we can find in our home. I hope the dogs will not bark during my brief remarks here. We work very hard at PACICC to curate a series of risk officers fora and webinars every year, 6 of them that are designed to be useful and informative. We have a particularly good agenda today, and I believe we will likely have record attendance. Maybe the quality of the agenda, and it may be just the fact that in fact, some of us are a little bit more productive at home, though we might not want to admit it, and have time for sessions like this. So thank you all for joining in. We're an industry of worriers, and the folks who attend these seminars tend to be the chief worry officers. And at PACICC, we worry that you don't worry enough. So we have invested over the years in surveys on enterprise risk management and an effort through these risk fora to breed best practice in effective risk management. My suspicion is that this global pandemic has validated all of the worrying that the folks on this call have done over the years, and that we are, as an industry, and our customers are now, and our brokers are now, and our employees are now getting the tremendous benefit of the enterprise risk management frameworks we nurtured, the business continuity plans we grudgingly got colleagues to spend time on, and the disaster recovery plans that everybody assumed would be a binder never used. And so there's a lot of validation for the logic of worrying. And so today we've got lots to worry about. I don't want to distract you for too long, but I do want to spend a couple of minutes on PACICC topics, if you'll humor me. First of all, our priority issue for 2019 was a review of coverage and benefits. Our board approved some changes after a broad industry consultation, which many of you were actively engaged in, or your firms were. And the net result of that was a set of recommendations to change our memorandum of operation for the first time since 2006. We have now received the unanimous assent of 10 provinces and 3 territories as of March 13th of this year. And at next week's Zoom annual general meeting, the PACICC board will then ratify these changes. They're material, they're significant, and they are, it's just like deciding to fix the roof before it leaks. There's a payoff down the road for investing when things are not in a panic mode, so that you're better prepared when things turn into panic mode. And we're very grateful for the support of the industry and the board to get there. Our priority issue for this year is enhancing our resolution toolkit. There are now 17 companies in Canada big enough that should they fail, the assessments we would send out to pay outstanding obligations of a single failed large insurer would be enough to cause financial difficulty for other members of PACICC. There's a comprehensive range of alternative solutions that we have formally the power to use, but have never used before. And so our project this year is all focused on how to think that through with our board and with our industry. We had a whole series of consultation mechanisms in place for this spring, summer, and fall, many of which will have to happen more remotely than we planned, and we're still working out how to tackle that. But you'll be hearing more from us on that important topic. Finally, our permanent priority issue, as determined by our board last fall, is quake and mitigating systemic risk correlated to a Canadian megaquake. And so thinking about how PACICC can manage that incremental adjustments to make things better, and working with IBC closely to help get to where we need to get to, which is a federal mechanism / backstop of some form that protects Canadian consumers in a worst case scenario. In fact, in the legislation passed by our parliament in the last couple of weeks, in this current emergency, the federal government has now received from parliament some flexibility to do things that could really help in this regard. You'll be hearing more from us about that topic as well. Out to pass back to Ian, but simply to say that our first speaker is going to help us understand where the industry stands in these uncharted waters. Federal government, central banks worldwide are struggling with unparalleled challenges. We're thrilled that Penny Lee from OSFI can join us to give us an update on the OSFI perspective, and looking forward very much not only to her presentation but to the Q&A that can follow. Ian will explain how, as a participant, you can raise your hand and signal desire to ask a question, and how we're going to facilitate that once Penny finished her introductory remarks. And then this pandemic validates why it's important to plan ahead for worst case scenarios. And so the evolving science around just how big the quake could be and what its impacts could be is very material for Canadians to understand and critical for our industry to understand. And Paul Kovacs will update us on where the science is taking us in this regard. Both around British Columbia and around Montreal, around Canada. And so I'm looking forward to both those presentations. Thank you for your patience all, and thank you all for having joined us today. Ian, back to you.
Thank you. Thank you very much, Alastair. I'm going to take you off Spotlight. Okay, so we are back to the agenda here, and you should be seeing that on your screen. I want to cover off some housekeeping issues for you. This is our first ever virtual Risk Officers Forum meeting after 7 full years of operation. It's the first time for everything. We see great opportunity in this. It's an opportunity for us to connect with members across Canada who otherwise can't sit in on these Risk Officers Forum meetings that are traditionally held in Canada in person. We have representatives from over 60 companies joining us here today, which is just phenomenal. It's a third of the industry online. Just terrific, and thank you very much. Record attendance. Special welcome to anyone who is new for the first time joining us. We are operating with the Zoom platform, as Alastair said, so I just want to go over some ground rules because we still do have people joining us, and right now we're pushing 100. There are over 100 people registered for this, and we're very close to 100 signed on right now, and I suspect people will still be joining us in the next few minutes. So ground rules to make this more productive. You're going to see a box in the corner of your screen which look like stacked blocks, and this will allow you to select the mode in which you view the broadcast. You can have speaker view, you can have gallery view. I invite you to just play around with that and find what suits you best. People that joined right from the get-go saw, we asked everybody joining us to please mute your audio and disable your video. If you mute your audio, it will eliminate the background noises, and also a strengthened signal will happen if you disconnect your video. It'll avoid breakup. When we go through the presentations, we're going to ask people to hold their questions until the end. There are 2 ways you can ask questions or post comments. One is to raise your hand, and the second is using the chat box. So in the corner of your participants view box, you will see, I guess you have an icon saying raise hand, and it queues everybody up in order. I will field questions in order. and you will be recognized. We'll ask you to turn on your audio. You'll introduce yourself, ask your question, and then we'll ask you to mute yourself again so that we can hear from our speaker. We'll just do that in turn. And the second way is to use the chat box, which is much like an on-screen email. You will find there's a to button, and use the drop-down menu just to select me. I don't think you want to be copying everybody with the questions. So if you just send those to me directly, I will pose those to our speakers, your questions and your comments. Today's topics are both practical and timely. We have Penny Lee from OSFI joining us to talk about, of all things, COVID-19. And Paul Kovacs from ICLR will be talking about the existential threat a major earthquake could pose to Canada and new science behind that. Antitrust compliance, I have to go through some more housekeeping items here. The Competition Act is in force. There will be no collusion, approaches to business strategies, claims adjusting practices, scopes of coverage, resolution of mixed claims, and/or the management of third-party vendors and service providers. Our meeting is being recorded. The meeting will be placed on our website for future on-demand rebroadcast. And this is very helpful to members who are not able to join us here today. Despite record attendance, there's still some that aren't able to join us, and so this is a way to connect them. And we will be sharing all slide presentations with viewers after the meeting. And let me move on here. Oops. To our keynote speaker, Penny Lee is on the line. You won't see her, but you'll hear her. So Penny Lee is Senior Director, Property and Casualty Insurance Group, Insurance Supervision Sector. Penny's responsible for supervision of federally regulated P&C insurance companies. She's a former Managing Director, Financial Institutions Group in Insurance, and she was responsible for supervision of the Toronto office portfolio of P&C and non-conglomerate life insurance companies. Penny has been with OSFI since September of 2001. She joined the Life Conglomerate Group as Senior Advisor, then Director and Relationship Manager for Life Conglomerate Insurers. From 2003 to 2005, she was Director responsible for the formation of a new monitoring and analytics support division at OSFI. Penny is an accredited accounting professional. She has held progressively senior finance positions in the private sector, predominantly in the life insurance industry, before joining OSFI. Sadly, she's going to be retiring shortly. This is her last forum meeting appearance and her sign off to the industry. So welcome, Penny, and thank you for joining us here this afternoon.
Great, thank you very much, Ian, and thanks for the introductions, Alastair, and inviting me once again to speak at this forum. I always look forward to it because usually I'm coming back from a vacation and I'm bleary-eyed and whatever, but this time I'm wide awake. But I might be in my pajamas, so you guys can't see me, so that's great. So I want to start out by saying, I'm very pleased to be here, albeit virtually. And I think these Zoom video conference facilities are really great. And I want to thank PACICC for, being able to adapt so quickly and being able to put on this forum using these facilities. As I was preparing for this presentation, I actually reflected on the fact that when I started at OSFI in 2001, a week later we had 9/11 events. And now I'm leaving during the COVID-19 crisis, and certainly not how I envisioned my last few months. But nevertheless, as a regulator, I know everyone says we tend to have a strong tendency to look to the dark side. However, if anyone had told me that we would see the economy close down around the world, I would never have believed it in a million years. This time we have disruptions not only in the financial sector, but the whole global economy at the same time. And many of us are also facing personal health challenges. For many of us, life has changed beyond recognition in the last few weeks, just weeks, not years. These are truly unprecedented times, and like every crisis that I've seen during my tenure with OSFI, each one is very different with varying impacts. As you would expect, today's agenda is focused primarily on how OSFI is responding to the current situation and what our expectations are during this unprecedented period. First, I'd like to touch briefly on our 3-year strategic plan, but the focus will be on the necessary adjustments to the plan as we've had to make due to COVID-19. So looking at OSFI's strategic plan, while it's very brief and it's very comprehensive, and it's also still very valid during this period. The first two goals are all about our FERFI's preparedness and operational resilience to financial and non-financial risks. This resilience is being severely tested right now, in particular given the unexpected nature of some of the risk exposures that we have. The third goal is around OSFI's own operational effectiveness and efficiency, which is also being tested with all of OSFI staff now working remotely. This makes agility and effectiveness even more challenging, but we're slowly settling into the new normal. Lastly, we want to preserve the support for OSFI from Canadians and the financial service sector by being both transparent and accountable. And I'll certainly try to bring forth accountability and transparency in this presentation. Our strategic plan has not changed. However, we've had to make necessary adjustments to focus on priority work. So let's move on to our top priority, COVID-19 considerations. Starting with the operational impact on OSFI. As I've already mentioned, similar to other companies, we're all working remotely, and after some learning and adjustments, there are no major transition issues. Working remotely will likely remain the modus operandi for some time, at least until right now, it's to May 3rd. We all need to do our part to flatten the COVID-19 curve. We're no longer conducting in-person meetings. All business travel is canceled for the moment, and lead supervisors are transitioning to in-person reviews. Lead supervisors are currently focused on gathering or assessing FERFI's COVID-19 impacts, responding to queries, and general market surveillance. We're also in the process of completing any reviews that we've already started. OSFI's crisis management mode, what does that mean? We have successfully implemented our BCP. We're responding rapidly to changing information and circumstances. We're also addressing immediate concerns, providing relief where it makes sense to do so. On the communication side, we're having frequent meetings. We're also communicating both internally and externally with specific companies and industry associations and other stakeholders. So what else is OSFI doing? What does that mean for you? In light of the current developments, OSFI is spending all of its consultations and policy development work on new or revised guidelines until conditions stabilize. This decision allows both OSFI and insurers to focus on addressing the challenges posed by COVID-19 and current market conditions. There are a number of new or revised guidelines applicable to the P&C industry and that are now on hold until further notice, and these are listed on the slide. Of particular interest to the industry is the planned draft revisions to Guideline B2 on prudential limits, which was planned to be released last month. This is now on hold and will also impact the timeline for the planned revisions to Guideline B3 on reinsurance risk management practices. We've also announced that we're prepared to offer flexibility to insurers that may have difficulties in meeting existing deadlines for filing certain near-term and non-legislative regulatory returns. And we're asking that insurers reach out to their lead supervisors to inquire if they require such flexibility. Continues to look to see whether we need to have further modifications in terms of supervisory regulatory or classifications. And insurers and other stakeholders will be notified in a timely manner if we decide to undertake any further modifications. Here is some other priority work related to our strategic plan that is now more or less on hold until conditions improve. One area, though, that I'd like to touch on is our expectations around timely reporting of material cyber incidents to OSFI. This data provides actionable and valuable intelligence for the office, and cyber incidents are more likely with everyone working from home these days. As you would expect, Osprey's top concern right now are COVID-19 related impacts on FER fees. In terms of operational resilience, and we're looking at people and business operations, how they're affected, potential financial impacts from the financial markets, economy, and the increasing claim. Osprey has asked companies to provide information on the operational and financial impacts, both near term and also medium to longer term. This includes what companies are doing in terms of integrated stress testing and review of policy wording to really understand and assess their potential exposures. COVID-19 is a real-world test of companies' enterprise-wide risk management. This will continue to be tested. We expect there will be significant uncertainty and volatility in the days to come. From the information that we've already gathered, we have seen that BCPs have been activated similar to Osprey, and employees are largely working remotely from home where possible. The operations of insurers. Financial markets declines and volatility continues to be expected, and this will impact earnings and capital. Equity market declines and credit spread widening creates downward pressures on companies. Lower interest rates will increase bond prices, but companies will likely be reinvesting at lower rates in the future, sorry. Significant volatility also is expected in foreign exchange rates, and this will also impact companies that have cross-border business. On the claim side, companies realize that policy wording, as I mentioned before, is key to understanding potential future claims, especially those related to business interruption and other liability coverages. Companies expect to see, we've also learned that companies expect to see tightening of policy wordings in the future, changes in product coverages, and perhaps the end of the hard market as a consequence. Though I'm not sure about the hard market though. So assuming the situation doesn't get much worse, and I'm not sure how much worse it could get, the overall impact to P&C industry in the near term is expected to be negative, but largely manageable. We feel that the impacts will be mostly felt by those insurers most exposed to equity and credit risks, as well as the unexpected uptick in claims for certain types of policies. More of this, I will talk a little bit more in the next slide. The medium to longer term impacts will depend on the nature of the recovery. V-shaped recovery not likely, and so consider a prolonged economic downturn scenario. A depression cannot be ruled out if the economy effectively collapses. But premature decline. Now in uncharted territory, and this is what we said in the last financial crisis, but even more uncharted territory now. Companies need to be even more vigilant than ever with disciplined underwriting, pricing, risk, and capital management, as these will be key to maintaining an insurer's health. So what have we learned so far? In terms of operational readiness, companies are confident that they're able to maintain critical operations while working remotely. Generally, claims activity is expected to be lower near term for auto, theft, and property damage claims due to quarantine and reduced population activities. Increased claims are expected for some lines though. This is travel insurance through coverage tends to be limited to unforeseen events. Business interruption, including event cancellation or postponement. Policy wordings are very complex, especially for bespoke large commercial policies. On the liability side, we expect D&O claims will likely emerge, and I'm sure that insurers are also looking at whether there is liability stemming from the number of deaths that we're seeing in private nursing homes. On the for surety, this line, likewise trade credit and mortgage insurance, are highly susceptible to decline in economic activity and potential increase in insolvencies of insureds. Companies have indicated they're closely monitoring the situation, and we do not as of yet, have any reason to expect that there will be a significant adverse impact to overall capital, as most of the policies have limits and there may be adequate insurance cover in place. However, I would say that individual companies are going to be challenged. So what else have we been doing? In addition to reviewing and analyzing information from companies, we've also been performing stress scenarios to understand the company's sensitivities to financial markets, equity and bond, also to liquidity and increased claims. Our lead supervisors are following up with FERFIs most impacted to better understand and assess how they're managing these potential risks. OSFI has made a few public statements which set out our expectations. We've always operated on a no surprise basis with our companies. Insurers need to be proactive in informing their lead supervisors of any financial or operational challenges, especially those impacting liquidity and our capital management. We are continuing to actively monitor the evolving situation. Before I open the floor for questions, a few last words on a personal note. First, I'd like to thank the industry for their high-level cooperation and helping me to do my work over the years that I've been with OSFI. I'm very proud to be associated with an industry that is there for consumers in their time of need, and also very proud to see how the country is coming together to do what is necessary to get through and manage this challenging and anxious period. I'll miss our engagement and wish you and your families well. So be well and stay safe. I'll turn it over to you, Ian.
Great. I'm going to take back control of the slide deck, and I'm going to now throw it open. I'm going to go to management participants. This is the time, if people are out there have questions for Penny, could you use your the icon to raise your hand, and then we will ask you to, we'll identify people, ask you to ask your question, and then go back and mute yourself. So do people have questions for Penny and the presentation about COVID-19? Okay, Alastair.
Thank you, Ian. Penny, thanks so much for that review of where OSFI is at in this very challenging time. And also congratulations on your upcoming retirement. You've picked a very interesting time to leave. Just thinking about the media coverage over the last week around business interruption. As a general rule, I think it's fair to say that the products that Canadian small and medium-sized businesses have been buying largely do not cover events such as pandemic, specifically require property damage and the like. And so as a general rule, I think we're assuming as an industry that our exposure is contained and managed. But we're seeing a number of US jurisdictions start tabling legislation that might retroactively force insurers to pay claims that are specifically excluded. Do you have a sense of from your survey of the industry so far, whether there are exposures for business interruption that could surprise us?
So that's a very good question, Alastair. And I was actually looking at some stuff this morning, and we do have a few companies. There are a handful of companies that have claims for business interruption and related to pandemic, but they're not that many. And most of them are also, they have equivalent reinsurance cover. So I would say we were a little surprised, but and generally speaking, as you pointed out, business interruption would normally not be invoked with a pandemic.
I have a question here, Penny, from one of our viewers. Hello, with the states in the South trying to get insurers to cover the BI, what's the rule in Canada?
I think the rule in Canada is it's legal, it's legislative and not regulatory. So it's whatever your policy wordings would be. So I would imagine this would be a boon to some of the lawyers around, for a while in terms of interpreting policy wording. So that's why I think I mentioned policy wording as being key to understanding what might be covered and what might not be covered. And I think a lot of companies are taking a really good look at some of that stuff right now.
Okay. Next in line is Paul Kovacs, has a question. Paul, do you want to, you had your hand up.
Hey, thank you. Keep well. Penny, one of the many items confronting the industry is the large drop in equity values as stock markets have been hit so hard. My understanding is that that's something that companies had been already thinking about in terms of their preparedness and planning, etc. And OSFI had been asking of companies in various scenario testing type events to think about what would happen if equity markets had a really bad time as we've now had. Anyway, is it your sense that what has hit the market so far has largely been issues that OSFI had already been in discussion with the industry and with companies about over the last 3 years, and these are scenarios that are not really a surprise to the companies to have thought about and to have informed OSFI about? Is this it's a shock to a lot of us, but this is the kind of thing that OSFI has been challenging the companies to already be thinking of.
So let me start by saying there are not that many companies in equities, which I think is good. And most of them that are in equities, of course, we have very, the capital required in equities is very large. And we've also tested the market downturn for companies. And yes, those companies that are heavily invested in equities are going to be challenged, but nothing right now that's not manageable. And as far as any stress testing, we've always asked companies to do stress testing on equity or credit markets or anything like that on a go-forward basis, but it depends on how severe it was considered. Only at OSFI. Substantiate what company. Does that answer your question, Paul?
Thank you, Penny. Absolutely. I'm glad you're always ahead of it. Well done.
Okay, thank you.
We're not always ahead of everything. Didn't know a pandemic was coming.
We'll now move to Grant Kelly from PACICC. Grant had his hand up. Go ahead, Grant.
Hi, Penny. Could you touch on are you in conversations with your provincial colleagues? Behind my question, and when I'm talking to some of them, they move pretty quickly to the industry better be there for their consumers. And I know the CCIR has started something on COVID. Could you tell the group about, are you interacting with the provinces? Thanks.
We have been interacting with some members of the province more actively than others. And as a matter of fact, we have a meeting. I am attending a meeting tomorrow with the CCIR, and we'll learn exactly what is going on in each of the provinces then. Right now, only what's publicly released. I think Ontario is taking the lead on COVID-19 and doing that for CCIR, but I haven't seen too much out of it yet. But I'm sure, like everything else, provinces are always concerned about their consumers. And we are too to some degree, right? But they're more market conduct and wanting to see that insurers are treated fairly.
Okay, thank you. And let's move on now to Narani Mahamoodali. Has your hand up. So you want to turn on your mic and please ask your question.
Hi, can you hear me?
Yes, I can.
Yeah. Hi, Penny. My question is around the business interruption also. We in the industry, we're hearing that some companies are offering some coverage, some type of coverage. Like, for instance, Gore Mutual has a limited coverage for something like this. Do you have a list of some companies that would have that, and what the impact would be if they had the coverage on their bottom line?
So first of all, we can't. I can't react to the name that you just spoke about. We don't speak to individual companies, but as we're going through our assessment, we are developing a list of companies that may have some impacts to business interruption, and depending on whether or not it's material, we're following up with companies on a frequent basis to understand what their exposures are.
Thank you.
Okay, thank you. Is there anyone else with a question or a comment for Penny Lee? Yes, I have TCM. A lot of acronyms showing up on my participant window here. So TCM, please identify yourself and unmute yourself and ask your question, please.
Hi, it's Tracy Mann. Not sure why it's coming up my 3-character ID.
Okay.
Just wondering, in this environment, if OSFI is considering certain places where capital relief may need to be provided to companies.
So if there are any adjustments, I think what it is that we would like to hear is from companies. If they're going to have challenges, and if we see that there are probably challenges in similar areas, then we will probably look to find out what we would do to give relief. But as of now, it is really more on an individual basis and understanding what's going on, rather than, it's not like the banks where we've gone out and said, particularly in the buffers, that we are given relief. So right now, we believe that the way, or the guideline A4 and the way capital is actually done, because you have an operational target, you have an internal target, then we have the supervisory target, that there is enough ladders in there that I think companies, as they go through their stress testing and understanding of how they might likely be impacted, can interact with their lead supervisors. And the more they can do that, the more we can understand what are the stresses out there, then the more we can think about whether or not we need to do something on the capital side. But it's not something in terms of capital relief, it's for the entire industry. And right now we're unsure that we need to do anything.
Okay, thank you for that. Is there anybody else with a question for Penny? You want to raise your hand or send me a chat notice? Okay, back to Paul Kovacs.
Penny, just because we have an opportunity, your focus today has been on property and casualty, but OSFI is looking across the whole financial sector. Anything special you want to share with us about how the banks are doing, how some of the others are doing through all of this?
Well, as far as the banks are concerned, I mean, what is publicly released, what we've done in terms of any capital buffers or releases, and there's a whole bunch of things that are going on with our federal partners in terms of trying to provide liquidity in the banking system. I think those are all very public announcements that we made. As everyone knows, the banking sector is much more prone to liquidity issues when we have an economic downturn such as this. So quite frankly, that would be a heightened priority for OSFI.
Thank you.
Okay, I'm just looking at the chat box here. Could you ask for me if there is a time? Are there other emerging contagion risks that we should be thinking of at this time?
So as I was actually preparing for this presentation, I actually saw that there was an earthquake somewhere in the US at 6.5 on the Richter scale yesterday. I think it was Boise, Idaho. I'm not sure. Somebody can correct me, but it was just flashed by my mind. And I thought, anytime a regulator says, oh, you'll have an earthquake and something else happened at the same time, it's way too far out there. It's too remote. But these things happen, just so everyone knows. So I would say that all the things that we are concerned about, including climate change and earthquake and all those things, are still there. It's just that right now our immediate priority is dealing with the COVID-19 impacts. This is near term.
Okay, thank you for that. That was from Brian Esau from Red River Mutual. Thank you, Brian, for that question. From Evelyn Pang at CAA, question for Penny. What's OSFI's position on consumer requests for premium deferrals?
I think we don't have a position on that particularly. I think it's, you know, I think CCIR might have much more of a position on it. I think it's each individual company's circumstances. They need to understand whether they can do that. And if they want to do it and more companies want to do it and need to have some sort of a relief, then I think that we can, you know, that's something they should reach out to OSFI about.
Okay, thank you for that question. Are there other questions or comments for Penny? Just give a minute here. Okay, we go back to Brian. Brian Esau, do you want to unmute yourself and ask your question, please?
So, Brian Esau at Red River Mutual. With respect to, are there additional risks that we should consider as a fallout from the COVID-19?
I mean, you know, a lot of times we spent on the policies themselves, but there is operational risks, right, that you need to be thinking about, because key person risk, you need, you know, it's not just, you know, sort of implementing your business continuity plan, but also thinking about what happens when and if certain people may be sick, and how will, you know, you be able to manage the operations of the company. I think those are the things that people should be thinking about. They should be looking at first order impacts and then second order potential impacts and various things like that. So you need to understand, you know, what are the things that could likely happen in this scenario.
Okay, thank you for that. Are there other questions for Penny? Questions or comments? That might be it, Penny.
Great. Thank you, guys.
You survived.
I survived.
Surviving and thriving. I'm going
Yes.
to take back control here now of the mouse.
Okay.
There we go. Okay, thank you, Ian. Hello, everybody. Ian, am I coming through clearly?
You are, yes.
Wonderful. I trust all is well, everybody's well, and your families are well in these extraordinary times. And the news right now is overwhelming with the COVID-19 issues that we all must cope with. Thank you for making time to join PACICC for this important conversation about what's happening at OSFI right now, and for giving me an opportunity to share with you some of the work that's going on in terms of the new science about large earthquakes. We've had several, well, more than a dozen presentations since September on this topic, and I'm pleased to have this opportunity to share this with you right now today, just give you a sense of somewhat some of the other issues that I think are really important for you. Funny, I'm not getting the full picture there, but anyway, we'll see if more comes in. So ICLR, Institute for Catastrophic Loss Reduction, we were created by one of the committees at the Insurance Bureau of Canada almost 25 years ago. There's 120 member insurers who support the work of the Institute. I think almost all the companies online are part of it. And so if you as an individual are not actively involved in the Institute, I think your colleagues from work will know of our work, and I hope some of what we're doing is helping you. That's our goal going forward. We focus on earthquakes, of course, which we're going to talk about today, but also flooding, wildfire, severe wind, and other climate-related hazards. Okay, this is, I don't have an image. Do you see an image on yours, Ian? So I'm not sure what's happening there. So it was actually some of these things. I'm going to jump ahead just for a second and then come back. I just want to make sure. Yeah, see, there's some things up ahead that aren't coming through.
I can revert to the deck that you had shared with us earlier, Paul, if that is helpful. If you
Let's decide to do that. For some reason, what it says is sharing is not sharing. So my apology to everybody here, but the system isn't quite working. Can you go back in?
Okay, so now let me go back to Paul's earlier slide deck was here. There you are, Paul.
Wonderful. Thank you. Okay, so the Institute, again, we've been going for almost 25 years now, and we've got 120 member insurers, and we do a lot of work for the government as well. And so I think everybody on the line, if you don't know of us, there's others within your companies that are actively involved. Next slide. Okay, so this is the one I want to spend some time on, just to talk about what it is I'm going to discuss today. So the image, this is an image of Christchurch in New Zealand, and it shows what could be seen just moments after the earthquake struck in 2011. The dust is the after the shaking that took place in Christchurch. That's the damage of the destroyed buildings, sending dust up in the air. Christchurch is a community that's not much different than Victoria in terms of size and construction and the nature of the economy or whatever. And this is an image of what we might be talking about someday in Canada, about the kind of destruction that can, in this case, led to a lot of people died and a lot of tens of billions of dollars of damage. I've split the presentation today into two parts. I'm going to talk a little bit about the prevailing view, what is it that we've learned about earthquakes over the last 50 years, and then I'm going to focus in on the new science, which is the point of the presentation. And in particular, we have new information saying that there's much greater likelihood of a large fire after an earthquake. And there is an expectation that when earthquakes occur, that they will shake more than we thought previously. So the combination of more fire and more shaking will lead to more losses. Over the last 50 years, we've learned a lot about earthquakes in Canada. Usually it's been incremental, and from year to year or from period to period, the change in what we know was a relatively marginal change. This, in the opinion of most of us involved, this is the biggest change we've seen in 50 years to happen all at once. So that's why we're having the presentation. That's why I've done a dozen of these the last little while. The next slide. So the first group of slides I have here are going to talk about what's our current view. I've put red at the top if I'm talking about what we were thinking before the new information has come. So perhaps the best known study out there is the Insurance Bureau of Canada commissioned AIR. The report was completed in 2013 using data that's now about 10 years old. And from that report, the simulation included a Kovacs simulation as well, but I'm going to focus on British Columbia for the moment. It simulated a 9.0 earthquake that occurred west of Vancouver Island at the bottom of the ocean, and talked about $62 billion of direct damage. About 30% of that was covered by insurance, so about $20 billion of insurance claims were predicted in the study. But a couple things that stood out in that particular study, it stood out to me anyway. The expectation about damage from shaking was about 100 times greater than the damage from fire. There was some fire expected, but it was very minor, and most of the losses came from buildings being destroyed and broken by the shaking. Also, before we go on to that one, Ian, yeah, there was a sense that only 30% of the losses would be, of the damage would be covered. A little bit higher on commercial, but very low on the residential side. The payments on the residential would be quite small. There was assumption of nothing on the government side was insured in this study. So a lot of things are not covered. And for me, it was always fairly uncomfortable to think that the expectation laid out in this document that this would be largely a commercial response, and that most of the residential side, we're going to put billions of dollars on the table, but most of the residential side is simply not going to get a response through a combination of some people not buying coverage, but also very large deductibles. Over to the next slide, please. So one of the other things that is part of the existing knowledge about earthquakes that we've been building over the last 50 years, there's a sense that the next earthquake is most likely to occur in Victoria or the Saguenay region of Quebec. There's about a 55% chance that that's where in the next 50 years we'll have an earthquake in Victoria or Saguenay. So the most likely area, is either Victoria, BC, or Saguenay area of Quebec. The much heavy populated parts of Canada, the risk of an earthquake is quite low in Toronto, but in the Montreal and Vancouver area, there's a 25 to 35% chance, and there's a lot of people and a lot of property, a lot of value. So certainly a lot of focus has been on the Montreal and Vancouver, but Ottawa and Quebec and some other communities have a fairly high risk of earthquake. So looking at the likelihood, we have some fairly major communities that are vulnerable. Next slide. So when all of that's put together, before the change in the new science, about 3/4 of all the expected losses in Canada are found in 3 communities, Vancouver, Montreal, and Victoria. They account for about 20% of the people in Canada, but they account for more than 75% of the expected earthquake damage going forward. So earthquake risk is fairly concentrated. Of the outstanding 25%, there's a relatively small number of communities that make up most of that. Earthquake risk is certainly not uniform across the country. It's fairly concentrated in just a few communities. Again, before the new analysis. Over the next slide. One of the things that the Government of Canada puts out every 5 years, they update this, is they tell the construction industry, here's the earthquakes we want you to design for. This is what we're worried about. So for Vancouver, the idea of a magnitude 9 earthquake accounts for about 5% of the risk that the construction industry is warned about. The total area under these curves is 100%, so the area for the Juan de Fuca Cascadia type event is relatively small. Most of the risk that the construction industry is told to worry about is sort of a magnitude 7 type event, very close to Vancouver, rather than a magnitude 9 event some distance away. And in particular, when places like the city of Vancouver does its worst case scenario, it doesn't look at a magnitude 9, even though that's sometimes called the big one. What Vancouver is actually worried about is a magnitude 7.2 is what they do for their own internal planning. And that's where most of the actual large risk is found. And on to the next slide. So this is the last of the slides I'm going to present before we get to the new earthquake science. The Government of Canada has a new model. They are using it to assess what is the impact that would come from a large earthquake. The model can be used to test a whole series of scenarios. We offered a training session for people from the industry to come and get trained on the model. It was not terribly well attended, but anyway, we've been doing a lot of work at ICLR to run the model to try to get a sense of what we're doing. And I know some people from the Department of Finance and OSFI and elsewhere at least have begun to look at this new model. So for the scenario we chose to run, we were looking at what would be the damage, the direct damage that would occur if there was an earthquake right under City Hall in Vancouver. I had actually revised this. This is one of the slides I was going to present a little differently, where I don't show the 8.0 because it's pretty well impossible to have an 8.0. 7.5 is as strong as it could be. But anyway, the finding here is that as you have more shaking, you get more damage. And when you get to an event like magnitude 6.5 earthquake, you're suddenly talking about $25 billion of direct damage here. But when you get further out, you get even larger ones going forward in terms of the impact. But coming out of this analysis, the important part of us trying to do something with the model is that the Government of Canada earthquake model has an analysis of shaking damage, and they are in the process of adding in other hazards, but it does not yet have things like fire following, liquefaction, landslides, tsunami, post-event inflation, indirect losses. And in particular, it is not designed for insurance. It's designed to help governments anticipate what losses might occur. So this is the expected damage, shaking damage that might happen a Vancouver type scenario. Okay, so on to the next slide, please, Ian. So here I'm going to shift gears, and I've got half a dozen slides where I'm going to talk about the new science. So the first core message I'm trying to share with everybody, there's new science saying that there's a likelihood of extensive fire that could occur after an earthquake. The image here is San Francisco after the earthquake in 2006. There's similar images for Tokyo after 1923, sorry, and 1906. And in both San Francisco and Tokyo, the fire damage was much greater than the shake damage. So for us to assume that the fire damage would be more than 100 times less than the shake damage is inconsistent with a few of the big earthquakes that have occurred around the world. So the Insurance Advisor Committee asked ICLR to look into this and see what was the fire risk in our country. So we put out a study in November for Montreal, and we did a study a few years back, almost 20 years back for Vancouver, but we're in the process of updating that, and we'll have that out by this fall. What we found with the Montreal and the Vancouver studies is the fire agencies were very good professional groups. They do a good job most days with most fires. And it was the view of the expert we brought in to do the work that if you add in a small earthquake or even a moderate earthquake, that the fire agencies would probably do just fine and that they would be able to cope fairly well. The issue was the extreme earthquake. And if there was an extreme earthquake, you would have firefighters who were hurt, you would have equipment damage, but most importantly, we were worried about could there be water available. And we laid out a number of choices of what could be done to be prepared, but at the moment, there was risks in particular about water availability and the capacity to put the fires out once they start. So I've moved to the next slide. So for the Montreal paper that we put out in November, we found that a 6.5 earthquake in central Montreal led to $12 billion, almost $12 billion of fire damage. We did a lot of Monte Carlo simulations and the number bounced around a lot, but anyway, the average was 12 billion of the expected fire damage. And of course, fire damage is all covered by insurance. But you need a pretty strong earthquake. And if you had a smaller earthquake, you did not get billions of dollars of damage. But if you had a very large earthquake in central Montreal, we found extensive losses. For Vancouver, I was actually trying to take out that 15 billion because that's unhelpful here. The study we did in 2001, we found $8 billion of damage, and we think losses, the cost of construction, the data on cost of construction roughly doubled over the last 20 years. So we're expecting a big number. It's not helpful to suggest what it might be because the study isn't done and it'll be ready later this year. But we're going to look at fairly large earthquakes in Vancouver as we did before, and we will share with everybody what we find as the possible fire damage. I would be quite surprised if it's as small as the $500 million that's part of the AIR study that was published in 2013. So our core message on the fire side is that when we've done some specific work in the two largest communities that are at risk, our sense is that we could probably cope with a moderate earthquake, but with a large earthquake, there could be fires that are bigger than appear to be what is being planned for. And we also laid out some specific actions the industry could do to try to encourage the fire agencies to be better ready and better prepared to prevent the fires from starting or spreading. If I move to the next slide, please. So the second of the core pieces of new science, the first was there could be more fire. The second is the expectation of more shaking. So this is a series of Government of Canada earthquake hazard maps for the country. The oldest one in the lower right was done in 1970 or 50 years ago. The government's committed to update these every 5 years. On first glance, looking across these, I see a lot of similarities, and as time has gone by over the last 50 years, they've become slightly more refined and a little bit more specific. But the broad message showing where the risk of earthquake is high or moderate or very low has been pretty consistent over time. While the graphs over the graphics, the maps over the last 50 years look fairly consistent, and in particular, the proposed new one for 2020 compared to the one in the middle at the top, the 2015, the current map, despite changing the color, the information looks a lot the same. But when we get behind it, we find that the numbers have changed a lot. And this is a critical part of what we're sharing with you, that the government of Canada and the scientists have a sense that the shaking that will come from the next earthquake will be bigger than we previously thought. If I move to the next slide. So zooming in on British Columbia, across most of British Columbia, the expected shaking in the proposed new map for 2020 compared to the existing map for 2050 is talking about shaking that is 25 to 50% stronger in most of southwestern British Columbia. Specifically in the Victoria area, the numbers are higher. Three of the reasons that are part of what we've been sharing from the analysis of why we're now expecting more shaking. One is those very large earthquakes that occasionally happen offshore. We thought they were happening once every 530 years on average, but we found a few more that have happened in the past. So there's now a sense that they happen every 430 years. And the last one was 320 years ago. So we're not too far away from the next one. And there's a sense that these are coming a little more often. Second, and perhaps the one that contributed the most to the change is a new understanding about how earthquakes come up to the surface. This is part of the new science being presented with this year's change in the maps for Canada, but it was also included in the new maps presented by the US service, and they were published a little over a year and a half ago. So the changes we are talking about for the Vancouver area are the same as were recently introduced for the Seattle and down into the California area. But third, we found some fault lines that are going right through Victoria with some of the more recent research. So there's a sense that there's a number of different factors that are all coming together to say when we have an earthquake in British Columbia, the shaking will be greater than we previously thought. If we move to the next slide. The expected change in the value of the shaking in the new 2020 Government of Canada hazard map compared to the existing 2015 map, the change in Eastern Canada is higher. The numbers are all smaller, so having the kind of percent change we're talking about takes us from a small number to another small number. But if I use one really important example, the number for Vancouver has increased, and the number for Montreal has increased, and Vancouver is still expected to have more shaking than Montreal. But the new number for Montreal is now at the level that we have been used to for Vancouver. The expected shaking in Montreal is what we had been expecting in Vancouver. Vancouver one has gone up now, but it just gives you a sense that in some parts of Eastern Canada, we are now expecting shaking that is moved up to fairly strong levels because of these large increases. If I move on to the next slide. I've only got two slides. So one group of Government of Canada scientists were looking at the expected shaking. We've been collaborating with another group of Government of Canada scientists who've been using their model to try to look at what will more shaking do in terms of impact. They've completed their analysis for British Columbia. We're still waiting for their analysis for Quebec. And we've got a webinar coming up in just a few weeks' time where that should be done, and you'll get a chance to see both if you're interested. But for British Columbia, where we're talking about a 25 to 50% increase in shaking, we're talking about a 40 to 150% increase in damage from shaking. So you get more shaking, you get more damage. We had to put values on this. The increase in the shaking is greatest in the Victoria area, and the increase in the expected damage is also greatest in the Victoria area. So using this model, the specific scenario we asked the government to run for us was to do the 500-year return period model. When they ran that model using the existing conventional view of expected shaking, they got shaking damage, direct damage in British Columbia of 17.5 billion. but just changing over to this new science about the amount of shaking now expected, we got $10 billion additional damage from shaking, or about a 58% increase in the amount of expected damage from the 500-year event, according to the analysis done by the government. We are, as I said, waiting for the analysis to be completed for Quebec. The percent increase in shaking was greater in the east. The numbers are all smaller, but the percent increase was greater in the east. And so when we get an increase in the damage from shaking, we're expecting a fairly large number. If I move on to the last slide. So what's all this mean? So for more than 50 years, the science community has been looking at the likelihood of earthquakes and the impacts of earthquakes in Canada. Over that time, there's been a number of changes. We've revised and clarified our knowledge quite a bit. We know a lot about earthquakes, and it's much cleaner and clearer what we have to share about the science of earthquakes in Canada and what they will do. But we've had some change in just happening right now. The Government of Canada change about the shaking is to be brought into effect in the 2020 maps that will be released later this year. The study of fire, ICLR released the Montreal study in November, and we'll release the Vancouver one later this year. All of this is happening right now. It's happening and coming up right now, but the change happening is we've seen in 50 years. What does all this mean? That have been supporting the industry conversation about earthquakes. One is PACICC is about what would a larger earthquake mean for the industry. All the work done by PACICC is completely relevant and it was designed to be effective, whether we're talking about the new science or the old science. It's just saying the industry's got limits to the amount of money, and here's an analysis of what they are. The IBC study was designed using data about the kind of shaking we were once expecting and the kind of property values that we had, say, 10 years ago. So the IBC study is now looking a little bit dated. The ability to use the 2013 study is now a little bit harder for making our case on issues like backstop, et cetera. And it certainly does not, it was done before this new information came out. So it doesn't reflect new information about the possibility of fire damage. It doesn't reflect information about the possibility of greater shaking than we were planning for. So it's certainly my view that someone should be updating the study. ICLR could do it, but somebody has to ask us to do it and give us some money to do it, et cetera. But I think it would be in the industry's interest to have a new sense of what all of this means for Canada, what it means for our industry, the fact that the science has changed about shaking and about fire. Second, for company CEOs, for company chief risk officers, for regulators, I think there's a need within the companies to be asking, what's this mean for the company? Have you reflected on this? The answer a few months ago would have been, we don't have anything new, right? But now it's out there. We've done a dozen seminars. We got, I can read the whole list of different ones we're doing. But we've got several that we've completed and several more to come. Anyway, as the word gets out over the next period of time, I would hope more CFOs, CEOs, CROs are asking internally, you know, have you thought about this? What does that mean for us? What's it mean for the rates? What's it mean for our reinsurance coverage? Do we have the right product? Is this product working? For us, for several years now, to say that only 30% of the damage, direct damage in British Columbia is actually covered, and in Quebec the numbers, you know, much lower. Is that the product that is the right product out there? When we were looking, the analysis presented for the industry by the EIR study said that a magnitude 9 earthquake would lead to $0.5 billion of fire damage. I think it's going to be a bigger number, and I don't know what the number will be, but we'll share some of our science later this year, and it'd be good to talk about it. But anyway, I'm going to have a bigger number. We presented the Montreal one. And the studies out there are talking about relatively little fires expected in Montreal. And our research confirms that for small and moderate earthquakes, but questions that for the really large earthquakes. On the shake damage side, the Government of Canada, through their model, is saying that 17.5 billion of shake will become a 10 billion more of shaking damage. So there is new sense that shaking will be greater than before. What does that mean for our coverage? How do we fit all of that in? How do we deal with that? You add all of these things together. The fire studies are looking just at fire. The shake model and data is looking just at shake. The industry covers a lot of other things, business interruption, landslides, et cetera, et cetera. So what's the total? How do we form a view on what the losses are? But if we had been reflecting on losses, saying what was considered a $20 billion event, does all of this imply that a $20 billion event is now a 30 or could be quite a bit bigger when you add all of this together? I'm not trying to present that we've done all of that work because we haven't been asked to do that. We are trying to tell you and share and get a conversation going that there has been a change in the science about earthquakes, large earthquakes in Canada. The two critical parts, but there's several layers to that, is a sense that the fire damage could be more extensive unless we make some changes in how we manage fire risk. The fire damage could be more extensive than has largely been part of planning by governments and by the industry. And we're also sharing that the shake damage, the expectation of strong shaking, will be greater. And it's important to reflect on what all of this means at the company and at the industry and at the public policy level as part of the broader conversation of earthquakes as the new science comes out. So with that, Ian, I'd be delighted to take any questions about anything I've shared and some of the other things that we have going on to talk about some of the more detailed specifics of all of this. So thanks, Ian.
Thank you very much, Paul. Something I feel remiss in not introducing you earlier, Paul. My sincere apologies. While we were having problems switching screens, I glossed right over your introduction. So let me do that for posterity for a minute and give people a better understanding of our speakers. So Paul is founder and executive director of the Institute for Catastrophic Loss Reduction at Western University, a former president and CEO of PACICC, certainly understands risk management. Since 1996, Paul's been a contributing author to the Intergovernmental Panel on Climate Change, the world's leading forum for the study of climate issues. Paul and the panel won the 2007 Nobel Peace Prize for their efforts to build up and disseminate greater knowledge about man-made climate change. He's Canada's leading authority on insurance and climate change and has been a contributing author to numerous international and Canadian reports on reducing risk of loss from earthquakes, flood, and severe wind. For more than 35 years, Paul has been a popular commentator on insurance, disaster safety, and economic policy. He's an author of more than 200 publications and related articles, a passionate champion for insurance, disaster resilience, and adaptation to climate extremes. He's worked in private industry, the public sector, and academia. Paul's co-chair of Infrastructure and Housing Working Group of Canada's Adaptation Platform and co-chair of the Science and Technology Working Group of Canada's Platform on Disaster Risk Reduction. Last November, Paul was appointed chair of Ontario's Advisory Panel on Climate Change. He's a man of the cloth. I like that. He's got one of the most impressive collections of bow ties on earth. So thank you, Paul, for the presentation. I'm going to get rid of my screen here and invite questions. So people, please join us by chat or put your hand up and we will recognize you and ask questions. So let's go first to Alastair Campbell, please.
Thank you, Ian, and thank you, Paul. It may be difficult to come up with a gloomier topic than the one that's on all of our minds these days, but you've just done it. It is startling to think about the scope of the types of events that you're describing, but it's critical that as an industry we do so. A couple of practical questions. Our insurers will have to model their quake cat exposure and demonstrate to OSFI that they are still adequate up to something like a 1 in 480 or 104 in 90 event. I'm assuming that on some schedule, this new science is embedded in the quake models, and that this then has a ripple effect through to the capital requirements for the industry. Do you have any perspective on the timeline for that, and how our member insurers should be thinking about that? And then just to pile on, second quick question, everything in the PACICC modeling suggests that somewhere above 25 billion of losses you start to have issues, and somewhere in excess of 30 billion event you start to have the risk of systemic issues for the industry in Canada. We've always thought that was fire science would imply that actually we could get that big insured event in Quebec as well now. Is that a correct conclusion? And what more could you tell us about how the fire following and the new shake are connected in the study you did in 2019?
Thank you, Alastair. So my sense is that there are a lot of unanswered questions right now. The new science is just emerging, and the history over the last 50 years as insurance companies have played a role in earthquake risk management for a long time, is that usually when the science changes, it's a smaller change. It slowly works its way through the system. There's not been a lot of rush to try to get ahead of things or understand what the time to the little bit of urgency into the process to people in our industry, and be available to help others, regulators and Department of Finance and others who are also reflecting on this topic, to understand that the change in the science this time is material. In terms of timing, so the Government of Canada issued in April of last year, so 12 months ago, this new analysis saying that there'll be more shaking. So that's been out for a year. They've been asking the science community and others, do you agree? Do you accept our story? I can share if anybody wants to read it, 7 or 8 papers explaining why the numbers have changed, why they think there'll be more shaking. We had an industry seminar, and I think we had 200 people sign up for it when we held that earlier this year. And so there was a lot of people who participated in the conversation. When was that one? That was January 24th. To try to share to have the government scientists explain directly why they're convinced that there'll be more shaking than we thought before. That becomes official later this year, but it's not official right now. So when will the modeling companies pick it up and work with it? I'm hearing from RMS that they've had the American data for a while, so to some extent RMS has been doing some work in their Canadian risk because it was already signaled by the US government. Certainly, at least for the Vancouver risk, was signaled in some of the Seattle work that was being done by RMS. But AIR and CoreLogic, some of the other Canadian models have not updated their models for a while. And there are times when the modeling companies sometimes wait 10 years or more before the science changes and they bring it in, usually because the changes were relatively small. But when I've been talking to some of the modeling companies, I generally get a sense from all of them that they believe that there's something bigger happening in terms of science. So they'll work on this sooner, and I think all of the companies will have something sooner. But none of them have given me a specific date when the new information will come in. On the fire side, we're finished our work for Montreal, so that's published and out. We're presently doing the work in Vancouver, meeting with the fire agencies and getting the new data. And our promise is to try to have it done for this fall. So by this fall, we'll have a new sense of our understanding why we think the fire risk is higher in both Vancouver and in Montreal. The Montreal case is already out there. We've tried to present that, and the paper is available if anybody wants to read it. Again, when will that get brought into the modeling company's work? their tone on the shaking and the fire as well is that they need to turn to all of this, but it'll take a little bit of time. All of this will take time. Alastair, you're also asking, what does this mean about the risk of hitting a threshold, of it turning from a bad event into something that could threaten the industry, threaten a much broader impact on society? So on both sides, having more fire and having more shaking take the impact numbers and make them greater. And the information that you and others at PACICC have been sharing, saying we only have this amount of money, and at some point we've done what we can. Those seem to show up now with earthquakes that aren't quite as large. So I think that'll be part of the dialogue, especially if we can bring that into the conversation with others like the Government of Canada, where we are having the conversation about a backstop. Where might we need to involve them? Because the PACICC analysis continues to hold that there's only a limited amount of money that the industry can make available for an extreme event. And so when do we hit that threshold? Could be part of an updated analysis from what's out there right now. I do share the view that I think the risk in Montreal is greater than we had been talking about. Does it reach the threshold level? Again, that's open for conversation. We had to do a 6.5 in Montreal before we got to $12 billion of fire damage, but that's pretty scary if we had $12 billion of fire damage. And the other part of the analysis that I would welcome seeing more work done on right now is that the AIR study suggests that this is primarily a commercial insurance response by our industry, and that homeowners in British Columbia, but also in Quebec, will get a few $1 billion, but not the kind of impacts that are going to happen on the commercial side. So 3/4 of the payments in British Columbia were for commercial, and more than 3/4 of the payments in Quebec were commercial. So how do we better understand what this threat looks like? So yes, I think Montreal has the potential of getting up to that threshold when we put in the extra fire. But the timing of all of this, when does this start to come back to the industry through the modeling companies? Be good to press the modeling companies and ask them and see how quickly they can give some answers going forward.
Okay, thank you for that, Paul. Thank you for the questions, Alastair. Are there other people with questions? Please put your hand up or send me a chat, question in chat. Probably easier to just put your hand up. You'll go right to the top of the list. I think you may have answered everyone's questions, Paul. Is there anybody with a question about the new science, large earthquakes in Canada for Paul? I am not
waiting and maybe moving toward a closing here, Ian. Again, just my counsel for all the risk officers around the table, make sure you're asking within the company. There's new science, so how much of that has got into the companies? I made a list of all the different things we're doing at the Institute here. We had one session where we had the government scientists who were talking about more shaking do a webinar for the industry to explain why. We gave them 90 minutes, so it was a very in-depth conversation, and it was, and again, well attended. We have a couple hundred from the industry for that. We've got another one coming up on April 17, and the one on April 17 is the government scientist who's trying to work out the impacts. So I hope for that one he'll have the Quebec analysis done, but he's the fellow who did the BC one for us, saying if you get more shaking, change the amount of shaking, what's the extra dollar cost of all of that. So I'm looking to that presentation. And we've had several meetings of our insurance industry advisory committee talking about how to make sure that all these papers and webinars and things we're doing get out to people in the industry. So if you're talking to your staff and they aren't finding a hard time getting a hold of information, let us know. We're here to help because we just want to get the right information to people so they can stay on top of it.
Another question, Paul, has come in from Narani Mahamudali. So Narani, do you want to please turn on your mic and ask the question? Thank you.
Hi, Paul. One of your slides showed like over 100 billion not covered. What I'm wondering is, does this number include reinsurance, or is it just for the Canadian P&C industry?
So if I've got the right graphic, we had one graphic in there with a red bar showing direct damage in Vancouver, and that one got up to 100 billion, got over 100 billion. So that particular graphic is the Government of Canada model of direct damage from shaking. So that is physical damage that occurs to houses, to commercial structures, to public infrastructure. It does not include fire, does not include post-event inflation, etc. This is just direct damage to physical structures. The Government of Canada does not know what is insured and what's not. Yeah, that chart, thank you, Ian. So this is not insured damage. This is total direct damage, insured and uninsured put together, coming out of the new model prepared by the Government of Canada.
Thank you.
Thanks, Narendra. Is there any other questions coming forward for Paul, please? Okay, Paul, I think that might be it. Well, thank you very much for both your presentations, Paul and Penny. That's probably a good point to conclude our discussions. It is early, but it's a nice day outside, so people will be able to get out and enjoy the nice weather. I just want to jump ahead to look at our next set of speakers. So we heard from Penny Lee, Senior Director of P&C Insurance Group, the Insurance Supervision Sector, Office of the Superintendent of Financial Institutions, and thank you as well to Paul Kovacs, Executive Director, the Institute for Catastrophic Loss Reduction. I'm going to advance to our next, there we are, oops. Upcoming events that you should be aware of. The next event is going to be an Emerging Risks webinar on Wednesday, May 20th. And we're going to have on the line Matt Moore. You remember him from last fall, Senior Vice President with the Highway Loss Data Institute, the International Institute for Highway Safety. And Matt has asked to come back to present specifically on collision avoidance systems and automated driving. And following that, our next in-person meeting, it might be an in-line or an online meeting. Not sure at this point how long the pandemic is going to last, but we're scheduled for a Risk Officers Forum meeting on Thursday, September 17. So we certainly hope you're able to join us for that. The next point, we're going to be coming back to you tomorrow probably with a satisfaction survey. So we'd like to hear your thoughts. Obviously, your feedback helps to enhance the quality of future broadcasts. This was a little bit sketchy, our first time on Zoom, but we managed through it, and things will improve as we go forward. We invite your thoughts on future speakers and subject matter, and certainly appreciate all the feedback we get from you. So thanks for joining us today. This concludes our meeting. We look forward to having you join us for the webinar in May, on May 20th. And in the meantime, stay home and stay safe. Thank you very much.